the Toronto real estate housing market conditions in March 2023 and how this affects your situation if you're looking to buy or sell a home in the Greater Toronto Area in the next few months is what we'll talk about in this episode of Toronto Living. If you've been actively looking for home this spring, you probably have noticed the spike in the number of buyers looking and competing to buy a home. You probably have heard or witnessed the number of multiple offers for a single house. This is the season of the return of the bidding wars, offer dates, and sales over asking. We'll tell you why this is happening again as we talk about Toronto housing market conditions in March of 2023. We'll bring you the latest numbers as well as prediction on how the housing market is trending. Welcome home. My name is Villar-Cisneros. I'm a licensed realtor and mortgage agent serving the Greater Toronto Area or GTA. If you're actively previewing homes in the Greater Toronto Area, you'll notice that in March 2023, the competition between buyers is on the rise as sales accounted for an increased share of listing in comparison to March of 2022. The average sales price was also above the average list price for the first time since May of 2022. Recent consumer polling suggests that demand for ownership housing will continue to recover this year, with first-time buyers leading the way as high average rents move closer in line with cost of home ownership. Now let's talk about numbers. GTA Realtors reported 6,896 sales through the Trev's MLS system in March 2023, down 36.5% compared to March of 2022. However, actual and seasonally adjusted sales were up from February to March or month over month. A few months ago, we were predicting that there would be more listings coming up as a result of the higher mortgage rates and many home owners unable to renew their mortgage or pay their mortgage. But as many homeowners renew this time of the year, we saw a lower mortgage interest rate and some homeowners are holding on to their homes a little bit longer. That's why we see new listings were down compared to last year, indicating tighter market conditions. The MLS Home Price Index Composite Benchmark was down 16.2% year over year but up month over month on an actually and seasonally adjusted basis. Similarly, the average selling price was down 14.6% year over year to $1,108,606, but up month over month on an actual and seasonally adjusted basis. Why is this happening again? A lot of factors. On April 12, the Bank of Canada held its overnight rate for the second time at 4.5%. This is the rate that the prime rate depends on. So, no changes this week. That's a good sign. Buyers are getting confident that rates will eventually be lower, so you'll see more buyers actually on the market. Will it go back to the rates at the height of the pandemic? I don't think so, but it's possible that we are heading to the rates pre-pandemic, and that's what we want to happen. Inflation rate, we are at 5.2 in February. We're still waiting for the numbers in March. We'll have that next week. The prediction is about 4.1%. Who knows? The Bank of Canada admitted, however, that it will be tough to get to the target rate of 2% this year as the Canadian economy is strong. Our unemployment rate is low at 5%. The prediction is we'll reach inflation 3% by mid-2023 and the target 2% by 2024. I can't wait to see that. Right now, I kept my variable mortgage to where it is. I just shut my eyes. I can't remember the last time I checked my mortgage. I just wish that renewal time, I will get there. Fingers crossed. Inflation and greater uncertainty in financial markets resulted in medium-term bond yields trending lower. How does the bond yield affect our fixed mortgage rate? They are inversely proportioned. So, if the bond yield trends higher, our fixed rate mortgage will go lower. So, we're seeing this trend right now, and as a result, we see lower fixed rate borrowing costs this year, which will help from an affordability perspective, especially as tighter market conditions exert upward pressure on setting prices in the second half of 2023. So fixed rate mortgages right now are around 4.59 for 5-year term. As population growth continues at a record pace due to immigration, first-time home buying intentions will remain strong. However, because of the number of homes for sale is expected to remain low, it will be important to have substantial rental supply available. Unfortunately, this is not something we have at the present time. We need to see a policy rate focus on bringing more purposely built rental units online over the next number of years. New listings were down on a year-over-year basis, indicating that the supply of available homes is tightening. This has resulted in a seller's market, where buyers are competing for a limited number of homes. It's normal to see 20 buyers competing to get a house in Toronto, and that's also partly because some agents put the list price ridiculously low. Sometimes I'm wondering if they really know how to price the market or just guessing it. And that's how the market will bite it. And putting it at a low number will definitely bait a lot of buyers. It's really difficult to know what's the comparable prices right now because we're coming from a declining market transitioning to a trending up market. So there's not much of comparisons. This is gonna be interesting when the appraisal comes in. In conclusion, the GTA housing market is tightening and competition between buyers is on the rise. The demand for ownership housing is expected to recover this year, with first-time buyers leading the way. Despite the decrease in sales compared to the previous year, the market is still active, and lower borrowing costs will make home ownership more affordable. The lack of available homes and substantial rental supply, however, is an issue that needs to be addressed to ensure a healthy and sustainable housing market. Based on this data, it can be interpreted that the Toronto housing market is currently a seller's market, with a tightening supply of available homes and increased competition between buyers. The market is still active as actual and seasonally adjusted sales have increased on a month-over-month basis. While there has been a decrease in sales compared to the previous year, the demand for home ownership is expected to recover this year, particularly with first-time home buyers leading the way. Despite the cooling off of the market, the average selling price remains high, indicating that the market is still strong and competitive. However, there is a concern about the lack of available homes and rental supply, which could negatively impact the market in the long run. To address this, there needs to be a policy focused on bringing more purpose-built rental units online over the next few years. If you're on the market for homes right now, prepare to pay more. A mortgage pre-approval is a great tool to have when you're competing for offers, as long as you can back up the numbers when you're submitting your application. Bring your documents up front to avoid surprises. Be very careful if you're going to put a firm offer, because it can not only bring you headaches, but it can get you a lawsuit if you cannot close, and you'll also lose your deposit. Overall, the data suggests that the Toronto housing market is still healthy and competitive, but there are challenges that needs to be addressed to ensure sustainability in the future. The lower borrowing costs will make home ownership more affordable, which may contribute to an increase in demand for ownership housing. Check out my other videos if you're looking for more information on buying, selling, and financing real estate. My name is Villar-Cisneros, your go-to source for all things real estate, mortgage, and beyond in the Greater Toronto Area in Canada. Until next time.